Well, hello everyone. I hope you're fine. Can you hear me? Yeah, it's good. Well, here I am today to have a little discussion about some basic things in RTM. As we remember in previous webinar, we totally talked about the RTM and analytical way and RTM based on setup. We have a discussion about the pros and cons of each way of trading. And well, on the previous webinar, I realized that most of the participants didn't have any obvious background about the RTM and the things that we telling to them. So in this webinar, I'm going to talk about the basic things in RTM, something like FTR, SSR, Ingolf, FL, and these things. Well, if you hear something, some voice like a scream, don't be worried because it is my parrot and it always have a, this kind of noise. It's really normal. Let's start with the FTR. Imagine that here we have a high, or here we have a low, we have a support and resistance right here. Well, one price comes and engulf this high and have a retrace and moves up. And moves up. Here we have a FTR. Let me change the color. Sorry, yeah. Here we have FTR. Well, this area is a support or resistance, and let me draw the other side for you. Sorry. And here we have a support right here. Sorry, here we have a support right here, and price moves down and engulf this support and have a retrace and continue to moving down. Well, here we have a FTR. It means failure to return. It is a abbreviation of failure to return. And in the classical technical analysis attitude, they believe that when price reaches to support or resistance, price should have a return. But when we say when price past that support or resistance, we call it failure to return. And that's why we highlight this area. So this is the FDR. And let me delete this one. The FDR, the FDRs is created by themselves too. For example, the second time when price reaches to this FDR, price can engulf. Engulf means eliminating all the orders, all the orders in this area. When price engulfs this zone, it has a retrace, and after that, it starts to moving down, and it creates a new FDR for us right here. And this is a new FDR, and we highlight from the engulf up to the deepest retrace. Engulf up to the deepest retrace. And the next FDR is here. Let me show you some examples in the chart. Well, for example, here we have a support or resistance, then this is the FDR. This is the FDR. And also here we have a support and resistance. This is the FDR. Well, the market is full of FDR and this sort of things. Let me show you. Let me move to lower time frame and show you more about these things. Well, here we have a FDR. This is a support right here, and price makes made a ingulf retrace from the ingulf up to the deepest retrace, and it holds this one is hold the price down, and new FDR is here, is this one. This is a new FDR from the ingulf up to the deepest retrace, and you see the new FDR is here, these two shadows. Yeah, sorry. And something like this. And well, the new FDR is here. Well, you see the FDRs is created by each other, and you see we get back to the previous FDR. So let me describe something else for you. Well, for the FDR, I want to talk about the major FDRs, and for example, here we have a support, here we have a resistance, and when price reaches to this area, we have something like this. The FDR is here. As I told you, from the ingulf up to the deepest retrace. It is not here. It is not here. It is here. It is this zone. But if it was something like this, the FDR is here, still here, because it engulfs and deepest retrace is here. This one is not engulfed. But when it retrace comes down and something like this, we call it it gets to the it gets to major. So it was a trick. But what is the flag limit? FDR is a really easy thing, and so the things that is really important is FL, flag limit. These terms I described them, explained them completely in 2 previous videos about 2 months ago, 2 or 3 months ago. I don't remember clearly, but I just described these things. But what is the FL or flag limit? We have some different opinions in the about the flag limit. Someone who believe in analytical RTM using have their own description about the flag limit, and the academy has the different description. Well, I'm going to explain all of them for you. Here we have again, I draw FDR for you first. Here we have a FDR right here, failure to return. Well, here we have a FDR right here. And you see, if this FDR holds the price up, when we say that holds the price up, it means that it should pass the previous high. We can this is the holds the price up. If price it was something like this, it is not hold the price up. It should pass the previous high, and we call it it's hold the price up. So the FDRs which can hold the price up or down, it turns to FL, turns to flag limit. Well, and the second time, when this FDR or FL engulfs, price creates a new FL for us, and this is a new FL. Well, this is the one description of flag limit, and but we have some other description and an explanation about the flag limit. Let me draw it for you. Oh, let me say something. We have the engulf of a flag limit is again a flag limit. Well, at a second time, when price comes here and engulfed this flag limit and moves up, so here we have a new flag limit again. Well, these are really simple things that you cannot make a trade with these things. You should wait in order to update the terms that I'm going to tell you. So, but we have a different opinion about the flag limit. So that is divided in 3 parts. Let me write it down here for you. The first one is left shoulder flag limit, and the other one is CPFL, that PCP, pre-CPFL, pre-CP, and ECP, end of CPFL. And the other one is RS, which means the resistance and support FL. So we have these 3 kind of FL right here. So we have these 3 FLs that they were introduced by the Academy. Well, I described the first one for you, and after that we going in a chart and have some examples in chart. Well, the left shoulder king is a FTR created on the left shoulder. We have a high here, low, and higher high, then lower low. Lower low is really important. King here and lower low. So the FTR created on the left shoulder is a left shoulder FL. But the condition is that it should pass the low, the previous low. It's really important. Here, if price, what was here, it is not a, left shoulder FL. Price should, pass this low, and then we call it is a left shoulder FL. So, the other types of FL flag limit is CP, pre-CP, and ECP FL. CP, we know that CP is a compression. What is a compression? Compression is that I draw a really easy and really understandable schematic for you, but it has lots of details. Price moves up and makes a FTR, and after that price confirm this FTR, then it backs and consumes the orders of the previous leg. So you see that here we have a FL, it holds the price up. So now the orders transmitted to the second leg. You see? Well, and the next time the price starts to move down and consumes the orders of the second leg, and it again moves up. So in this time, the orders transmitted to the third leg, and then price moves down and consumes the previous leg's orders, and so on. It moves up. Well, we show the CP and compressions with the with these lines. This is not trend line. It's a thing that we just show highlight the mark the compressions, and one price engulfs the last low, engulfs the last leg which has a orders. When price engulfs that, it could fall up to the first flag limit. It is guaranteed. So let me draw it again a little better. So 2 area is really important in CP. Let me delete this one. The first one and the last one. These are really important. The FTRs created on this law is a we call it pre-CPFL, and the FDR created on the first one is a end CPFL. So this is these two area, we call it pre-CPFL and end CPFL. Is a PCPFL. This is a ECPFL. Most of the time, pre-CPFL is more important, and most of the time, because it has a really close definition about the flag limit that I told you created by the FDR, hold the price up. You see that here we can find a FDR. See that here we can find the FDR, which is holds the price up, and this is a really important area because it has a close meaning to the RSFL. So what is the RSFL? Let me draw a RSFL for you. Imagine that here we have a flag limit right here, and price moves up like this. Well, the last low took the price to the target, took the price to the last high, is a really important. We call it SSR. SSR, RSFL is a FDR created on the SSRs. What is SSR? SSR is significant support and resistance. What is significant support and resistance? They are, the obvious support and resistance, or that's one, the high and lows that you see they move really sharp. And especially the low or the high. The low took the price to the last high, or the high took the price to the last low. Something like this. You see the high took the price to the last low right here, and price makes a RSFL right here. You see, these are really important area, and they have a close meaning about close definition to the previous the first type of FL that I told you. Well, let's have some examples on the chart, and then we have some questions and answers right here. Well, let's move to 1 hour time frame. See what happened here. Well, we start from here. Well, you see, this low is a last low. This low is last low, took the price to the last high. It is a really important low because lots of orders were loaded here. So the FDR created on this low is a FL, is a flag limit. We call it RSFL. Let me change the color because it is bearish. Yeah, we call it this is a RSFL. You see right here. Well, if we move to lower time frame and see what happened here, well, we see a left shoulder kink right here. Well, here we have a high, low, higher high, and lower low. So the kink created FDR created on the left shoulder is a left shoulder FL, is LSFL. Well, on the other hand, here we have a, on the other hand here, we have a this low took the price to the target, because here is a previous, here was a RSFL, and we have a this low took the price to the target, to the RSFL. So here we have a another RSFL too, but you see that price engulfs this one, and get back to this left shoulder kink right here. Let me move to lower time frame. Sorry, let me move to lower time frame. So what is this? Oh, okay. Well, you see here we have a left shoulder kink, left shoulder FL right here, and it holds the price up. So price engulfs this RSFL and get back to the left shoulder king or QM level, and after that, price took the orders from the bigger left shoulder king. The left shoulder FL created in a higher time frame or higher scale. Well, and you see that the orders has transmitted to this leg. So here we have a CP right here, because you see the orders transmitting to each other to the leg after that. And so here we have another CP, and you see after the CPs we have a sharp move, because price consumes all the orders and it clears the way in order to have a great move. But you should check in order to you should check here, because if one FL remains, it can be a barrier about for the price. So here here you see it consumes the orders right here. And here we see that this leg consumes the order right here, so the orders transmitted to this leg. Well, so in a second time, price comes and engulfs our last area, and you see here we have a CP. This is a CP because the price consumes the orders, and you see after that we have a sharp move. So here we have in this area here we have this area is a pre-CPFL, and you see it holds the price up. So, but you see that price engulfs this pre-CP right here, and price get back to where. Let me move to one step higher lower time frame, and you see here we have a CP again to here, and if you draw a CP pre-CP, you see that it's this FDR created, the little FDR created on the pre-CP is a pre-CPFL, and now this leg consumes the order, so the orders are transmitted to this leg. Well, and it holds the price down. When price engulfs this area, it got back to the pre-CPFL, and it starts to moving downward. Well, so let me see. Well, the orders now is in this area. And you see the second time it holds the price down, and let's but this area is really big. We must optimize it. Let's move to lower time frame. Well, guys, here again we have a CP. Here again we have a CP. Let me delete the previous one, because here again we have a CP. Right here we have a CP, and this is the pre-CP right here, pre-CP. And you see that again, like the CP here consumes the orders right here. And now let me see, and again this leg consumes the orders of the previous one. Now this is the final, so here we have again a CP. Well, let me delete this one. Well, You see the last area remained is here. This is the last area remain. Let me, this is the last area remain. So what we see here again, we see, we're seeing a CP. Here again, we have, this is a CP. So what is a pre-CP? Pre-CP is here. Pre-CP and NCP together is this area. So let me mark it. Sorry, let me mark it. Yeah, you see, it was the last area, last remained area, and you know, price took the orders from here beautifully. So, well, let me delete this one. Well, so this area was a flag limit, and we completely analyze it with the details, and we see that it holds the price down. Now, the engulf of that FL is a new FL, and on the other hand, when we move to lower time frame here, again we see CP right here, and also, and this is a pre-CP, and also you know, and also RSFL right here, because this low took the price of the target, and it is a, you know, a CP and RSFL both together. So let me move to higher time frame right here, and you see right here exactly, this is the swap of the previous you know, pre-CP, and one price, let me show you something beautiful. One price engulfs the bigger one, it get back to the you know, it made a retrace to the smaller or lower time frame flag limit. You know, it is DP. You know, I see in some references they call it DP, but DP is a lower time frame flag limit. It isn't any special thing. It's just a flag limit, lower time frame flag limit. So, and you see here, let me show you something beautiful. We delete this one. Sorry. And you see, it's, this is not engulf right here, because here we have a lower time frame FL, and you see after the price here, price makes the upward trend right here. So well, here we can find lots of RS, LS, and these sort of things again right here. Well, here is the last low, took the price to the last, is the last high, took the price to the last low. So this is a RS, but you know, this one is a RSFL. You see, it get measured. So this is the RSFL, but price didn't get back to it. No worries, but let's see what else we've got here. Here we have some left shoulder king and these sort of things here. And you see that here we have a flag limit, because it's in gold, because this low took the price to that high, and you know, it is the RSFL right here, and also left shoulder king and left shoulder FL, which is worked. So this area is swap of that FL. Sorry, swap of that FL. You see it. Let me move to higher time frame and see what happened. Yeah, the angles of that area is here. Yeah, the price engulfed right here, and you see it holds the price up again. Guys, here again we have a CP right here in a live chart. I remember, yeah. Here we have a CP right here. Again, here we have a CP right here. And you know, the compressions are really important. You know, please consider them in your trading. Well, was the thing that I supposed to tell you. So let's move to the question answer. Mr. If, okay, maybe it's the great if minus. That is not a PCP trader. Okay, Mr. If minus, if you wanna mic, please ask to please raise your hand, because we are really eager to you know, hear and learn lots of things from you. So the questions, let me see the questions about this is wrong. Well, internet connection lag, your internet lagging, mine so lagging, presenters internet lagging. What if it's consuming and then we have a pole and then another compression? The pole makes the order stop transforming before, right? Well, you know, when we have a spike and compression, it is a real common thing when price is going to, when price wants to reach to the target, usually it reaches with a spike and, you know, compression. And compression is a thing that price clears the way before the, you know, fall. How to know if retrace has completed for FDR? You know, yeah, this is a good question. You know, as I told you about this one, for example here, when you find the lower time frame flag limit or DP, you know, DP is a thing that you know that it's a place that price should reach to it. For example, imagine right here, imagine that price engulfs this area and didn't get back to the you know, lower time frame FL. At the second time, it you know, make the you know, FO or fake out to the lower time frame FL or DP right here. It's that's why that's how we can know and understand when the FDR is complete or not. But you see that? Oh, but you know, the FDR completed. I can understand the, you know, Arona Mayowa question. I want to ask questions, sir. If there is RSFL and LSK, are the which is more important, and those swap FL will be considered the future reaction. You know, based on the experience, left shoulder king is a higher scale and it is more important. You know, RSFL, you know, trading RSFL need to have some tricks, and you know, but I telling you, left shoulder king, most of the time left shoulder king is more important, especially when price came from the higher time frame engulf. The question, Mr. Diego. Question: what is the RE? Well, we are told that there are no orders left and price should free fall. The other side, yeah. However, I often see that price reacts somewhere. Sorry, yeah, somewhere that is in the middle and turns the price around, which is very frustrating. What I ask myself, is price reacting to? Mr. Diego, the things that you said, yeah, I totally understand, but you should you should check with the details, something like here that I drawing. You should ensure that all the orders is consumed and there is no area left, there is no flag limit left. If one flag limit left, price makes a rejection from that one. So you should ensure yourself that all the flag limits and all the orders consumed in the way down. Well, let me see. Next question. Also remember the market. Also remember, Mr. Eves told us, also remember market 6 symmetry. That's why LSK works perfectly most of the time. Thanks, great master. But I completely solved the left shoulder king for myself with that trick. And I find a left shoulder king with a true high and lows, and true high and low is a flag limit. And I find the left shoulder king with them. And I don't work with symmetry, but one guy who friend of mine, and we working together, Mr. John. He's really he's really great in working with the symmetry. Well, understanding manipulation psychology. Okay, Mr. Ifmanet, we are really eager to hear you. I ask you to unmute if you have any statements. We are ready to use your great statements. I ask you to unmute, Mr. If. Well, maybe Mr. If not eager to talking with us. Next time made. Okay, master. Well, let me see the other questions right here. Wrong about PCP. PCPFL is not a really sophisticated, it's really easy. And question regarding BESS, well, in ICT method, they took the liquidity or imbalance or draw. I never ever worked with ICD, and I don't know what it is. But I heard ICD, but I never worked with it. Well, I just know the RTM, and I combine the analytical and based on setup weight together, and I trade with that, and it needs lots of practice, but it's 100% profitable. 100%, I guaranteed. If we find a CP and the above there is an FL or supply zone, we directly jump into that sell trade, or else we wait for the confirmation. Of course, we wait for the confirmation. Of course, we wait for the confirmation. When you see, CP is a signal for us in order to make a good trade. Well, let me draw a schematic here for you. For example, when you have a flag limit right here, price moves up, and here we have a CP. Well, when price hits this area, after that the price engulfs the pre-CP right here, we are allowed to have a trade in the QM level and, in the QM level or some place right here. But QM level is the best place to have a trade right here. But maybe you can see that the price didn't got back to the QM level, but no worries. We want to make a profit. We never want to make a trade all the high and lows. We just want to make a profit. If price if price didn't got back from the QM level, it's no problem. We wait for the really clear and good situation to trade. Okay, well, the guy with the if, maybe he's not if, and yeah, and after that here we have a Mr. Pedini and Harry. Oh, okay, I got it. These are the fake IDs, and these are the fake IDs, and okay, I don't care to them. From what I have learned, I have never used PCP and ECP individually. Prefer to taking one as zone caps. Yeah, you're right. Yeah, PCP and ECP, it is not good to use them individually. In this webinar, I'm just telling some basic things in RTM, and in the future we have lots of work. We have lots of new terms in future. These are just the basic things. If we find a CP and above, okay, answer that one. Okay, question: what the value of defraying if the difference between FTR and FL is just FL is a FTR that it is really probable to hold the price, and it's a really good place to trade. But we never make a touch trade. As I told you in previous webinar, we wait for the confirmation. Well, yeah, all the academies here. So I think one of our friend, whose name Gust, wants to have some discussion, wants to have some talks, and please, dear Gust, if you want to talk, raise your hand, and I ask you to unmute yourself. Well, the things that if wrote here, yeah, it's completely, you are confirmed that you're not a real master. Yeah, of course, the real master is, sitting in his room and makes a trade with himself, and he don't have anything with our webinar. Well, Mr. Ghost, you told me that you wanna have some discussion. Well, I'm waiting for you to raise your hand, and I'm waiting for you to raise your hand, and I ask you to unmute. Okay. Ask you to mute. Well,
Hello, can you hear me?
sharing, dear, and you can share your screen and tell us what you want. Tell us the things that you want. Okay.
Please allow me to share the screen.
Yeah. You want me to share my screen or?
No, just allow me to share.
Okay. There is, yeah. I give you the permission for sharing your screen.
Can you see my screen?
Okay, you're welcome.
Okay, does anybody have any questions that they want me to answer or try to, I see here, could you please differentiate QM at the top and QMS continuation?
Well, they
Okay,
told that the voice is not clear, but our friend is using the voice changer in order to have his own privacy. It's okay, guys.
let's look at, I think gold is a good trade here. And I think the most important thing when you're looking at the chart is look at the higher time frame. And the higher the time frame you look, obviously you'll get a better picture of what's going on. If you look at the monthly, for example, let's start looking on gold. You can see on the gold chart, for example, there is, at least I don't see any engulfing to the downside. So I would be looking to floors, for example, after we break this, right? We have no clear QM structure that I see on the monthly that would suggest that we will go down. So based on that, I would advise everybody to look into the higher time frame, monthly, weekly, and then daily. And then really, if you want to enter, like Mr. Fee already explained to you, look at those three structures for flag limits, right? The SFO flag limit, the pre-compression flag limit, and the LS flag limits using the using obviously proper risk management. For example, here is one trade today that happened. That's pretty obvious. If you look at, let's look at high time, let's look at M15, right? We'll see price accelerate very heavily into the downside. We create this, low, lower high, low, higher high, right? And this is our left shoulder flooding. So you can be, obviously, with money management, you can take a trade like this. It's very simple. It's a QM, basic QM, right? Which it didn't come to the left shoulder here, right? And we have some sort of inducement. This will be where people will put their stop losses, right? This is called inducement. You can be pretty sure that there will be a reaction here. If you take trades that make sense like this, you obviously look at the higher time frame first, make sure there is no engulf or we haven't hit a target. A target is a flag limit, right? So if you go higher time frame and you don't find any flag limit that you've hit, in order to reverse, let's say here, if we want to reverse, we'll need a bearish flag limit, right? But I don't see on a monthly level any bearish flag limits, right? There was no here. That's why price just broke all the highs here. There is no here. That's why price will break the highs here as well. We don't know when it's going to happen, but I don't see any flag limits. Same thing for the weekly, right? If you look at the weekly, we don't see any flag limits going down here. The first one that we see is this FTR that turns into a flag limit, right? We have price, keeping, price down here, right? So this will be our flag limit, and then this will be our swap, right? So from here, any sales, I wouldn't advise. Just let's see if there's any questions. Share RTM. What do you want me to share about RTM? Okay.
About the, yeah, you're asking about the order flow. Free order flow, and is really has a close meaning to the RSFL that I told to you, but in next webinars, I will totally describe to you that what is it.
I think, let me see, where are you? Yeah, so if you don't give me like a concrete question, I cannot answer. Share RTM. What do you want me to share exactly? You want me to focus on a particular topic? Let me show you this example. As another cell. It's going to the lower time frame. Here, this is the high at 2009. Let's see, price react to something on the left. Obviously, don't have time to check everything, but let's just check this one right here. Our price react to something on the left. We have a QM. Price starts going down from here. Where is our first visible flag limit? I would guess it's this one because it keeps price up, right? And this is an FL swap. So you can take a short here using proper risk management, or you can wait for the future. Let's see what happens in the future. Price comes, has a small reaction, but there is no price action here. If you want to sell here in this area, you have to wait again for confirmation. Everything is about how fresh is the zone and the higher time frame. You cannot expect after price being down, let's say 2, 3, 4 days, the price will come back and just shoot through here. You need to realize that people need to fill the orders. They cannot fill them just in one tap like this. As you can see, it took them a whole day of filling orders before they start going down on this area. And again, they made a QM here, which will be your confirmation to sell if you want to sell in this area. Just use risk management. This is obviously as well. You can, if you go to lower time frame, you will see again the same concepts, but just a little bit. We have the compression here. Price breaking. Did it break? Let's see. It didn't break. We have this high, low, higher high, lower low. And this will be our LSK, right? Left shoulder flag limit. Again, because it took so much time to come back to here, we need to wait to see what type of reaction we're gonna get. We come here, see price a little bit breaks the LSD actually, but we don't know what's happening in lower time frame. I would always suggest to keep your stop loss if you're pitch trading above the high here. But we get to the target. This will be our target, and again, we wait to see what price will do because it's a late retest, right? We don't know whether their intentions are the same as they were yesterday. We have a high, low, higher high, lower low, and again, we have the same LSK. Okay, so this will be a pretty good signal to short here on a touch trade, but if you're not comfortable with trading here on a touch trade, you can again take the QM here. Even better, right? So just don't be putting pending orders everywhere, expecting price to do things, right? It's a market is very dynamic, and if they don't retest right away, they might create a different scenario. If they hit a target here, let's say on the bottom, a similar setup happens, right? If they hit, let's say, yeah, there's a QM here. If they come, break this, I make the QM, and then they can easily blow through this high. So you always need to wait for confirmation. Again, if you have one or two, just take the trade. Risk 1% for 10, and you just compound from there. Let me see here. What if we have a CP, then a call, and then a CP? The orders are not transferred because of the call. Then what? What do we do in that case? Okay, so let's find an example of this and see how we can help our. Let's see. So this is a CP call. In 1 second, so I can find a nice example. Usually, let's not waste any of our time here. I'm just gonna try to do it here. So we have a CP. Just let's call this CP. A CP here. Right. And then we have the pole. In order to understand what's going on, we need to check on the left side what's going on, right? So this CP is either happening at a key level or like a target level, right? And if sometimes price CP is like this and doesn't break this law. Once price breaks this law, we can go down. But if price doesn't break it, we can pretty much be sure that we'll blow through this zone here. And again, if we have a CP here, we wait again for the same thing. It's all related to what's on the left. Have we hit a target on the left or have we not hit a target on the left? That's the real question you should be asking yourself. Yes, of course, there will be orders here, obviously, because it moves price, right? But you need to understand what's on your left side. So if there is a flood limit here, then we break into the flood limit at this area. Oops. There will be most of your orders in this flood limit, right? So then when price starts going back down, you will mark this one as your flood limit. Like this. And so on and so forth. And then the target will be your other pre-compression zone, this one here. Again, that doesn't mean just buy straight buy here. Just wait for a confirmation, wait for a QM, wait for an IQM here. Wait for something that will tell you, okay, there is a high probability of price going up from here, like a QM or something like that, like this. If price just comes and just straight breaks to this zone, why would you start buying here? That's no point, right? But just be careful with your money. Don't gamble it. What is your platform? It's called JForex. Sir, what's the difference between origin flood limit and RS flood limit? Is RSFL and RS mouth same? So I'm not sure as well what is origin flag limits. So materials comments on that. Maybe Mr. Fee can give you some information. But for RSFL and RS mouth, I'm pretty sure it's the same. It's just different names. It is Let me try to. And Mr. Fee, let me know if I'm getting, because this is obviously part of the course. I don't want to, overshare. So the RS, like Mr. Fee told you, is we having a FTR that just turns into, let's see here, we got a barrier or significant support and resistance on the left or on the right, and we have this FTR here that holds price down, right? And this could be our RS multi. So I think it's the same thing. I think it's the same thing, just different terminologies. Just don't confuse yourself with different terms. RS and RS multi are the same. Would you please explain a bit about scale? Does it relate to LSK? When should we wait exactly for the price to come back to LSK? Okay, so scale is like the hardest topic in RTM. And as of right now, I cannot claim I understand scale. One thing that's helped me, like I started from the beginning, is looking into the higher time frame. If you look into the higher time frame, you would understand where price wants to go. Let's say you are in this area here, somewhere here, right? You don't know where price wants to go. I don't see visually here a flag limit because I don't know what is on the left. Nobody knows because it's all time high, right? The first flag limit that I see is this one here. And because it keeps price up. It's very simple. Flag limit is an FTR that breaks here and keeps price up, right? We hit this flag limit almost to there's a lower time frame and so on and so forth. But the point is, we arrive at this flag limit and we start here. This is the whole compression here. You can see it, right? Compression, 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 and then price breaks out of the compression at this area right here. Well, this will be our pre-compression zone. So obviously, you won't trade on the monthly or on the weekly or the daily that much, right? You want to trade shorter periods of time. At least for me. Once I see that we turn price here and there is no visible, okay, I guess this is our first, flag limit that kept the price down. Well, there is here you can start trading buys. You can look into lower time frame and see where you can find buying opportunities if you want to multiply your account here. Again, this flag limit right here, or you can also see it's an LSK. It's a little bit risky because we don't know what's on the left. So I would advise against trading here, and also it took 7 years to come back to here. Do you think somebody in 2012 put an order and wait 7 years for it to execute in this area here? Obviously no, right? This is going to change, probably. And that's why you see here price made a small retracement, but ultimately they broke up. But you need to realize that the market is very dynamic. You cannot just look at a simple pattern and think it's going to work. You need to be very, very dynamic in this sense. So yeah, I think scale is related to this understanding higher time frame, and the higher time frame will always prevail. I mean, looking into, for example, this bullish engulfing candle. So this is 1, 2, 3 months, and then a small retrace candle. During that time, there were many opportunities for sale, right? But they are more risky considering that the higher time frame is up, right? Obviously, you can sell here, you can sell at these turning points with the QMs, but you need to be aware of higher time frame, right? So that's why I think you should look into the high time frame. How is it related to the LSK? I cannot answer. I don't know yet. When should we wait exactly for price to come back to LSK? So I think you need to, in order for LSK to work, we need to hit a target. Or in other words, we need to hit a flat limit, right? Like for example, this one. You can do your research why this is a flat limit in the past, but just one simple, it holds price up, right? Okay. So then we start moving into this flat limit. We create a low, we create a high, we create a lower low, we create a higher high. We have a 2M here. This is a little bit strange one because it's also a diamond as well. The LSK will look something like this. Obviously, if you're not comfortable with taking a touch trade here and putting your stop loss below, you can and should look into the lower time frame here when we hit the QM. You'll see here, there is no price action, there is no flat limit that's in growth. This is the flat limit that keeps the price down. You can just do it like this, just track it, track the orders. Look at where the flat limits. So this is the last flat limit, right? And we break it around this area. Boom, you can take a trade. I think it was NFP or what was it? There was news here. But you can still take a trade here. Take your entry here, put your stop loss below the low. It's simple. You win. Any other questions? And it's back to the scheme. Okay, I don't think there is. Let's see.
Well,
Thank you. I guess
thank you, dear friend. No, you told us a really good things. But please, for the next webinar, don't change your voice, or if you change it, make it a little bit understandable. It is understandable, but not that much. Thank you. Have a good time, my friend. Do you hear me? Or yeah, okay. Well, so guys, I think there is no more question. We have webinars again in the future. So I think it's enough for today. It's approximately more than 1 hour in this webinar. So guys, have a good time. Take care. I will put the recorded webinar in this session to the channel, and you can download and watch it again. Well, stay tuned. Have a good time. Take care and bye-bye.